We are now living the reality that was only a dream in the tech and telecom bubble. That was a dream, and you had investors piling into the dream. Today is the reality, and they're running away from it. They're running for the hills, running for their benchmarks. The decisions in the tech and telecom bubble ended badly.
Time to sell stocks to crypto? It's no secret that the market is trading down and witnessing some of the biggest beatings. In fact, these losses have been so bad that many people are now wondering if they should hold on or sell. Cryptocurrencies were hit even harder. Bitcoin slumped below $30,000 for the first time since November. Ethereum is also trading at approximately $2,000 right now. Cathie Wood believes that the bear market is not going to stay forever. So what should you do? In today's video, I'm going to share her viewpoints on whether it's time to sell stocks in crypto or not. I mean, there are a lot of indicators that we're currently in a bear market. Investors are not as confident in the market as they once were. But is this really the right path? And is the Fed making the right move?
We think over the next month, now they have another meeting in June. Over the next month, we believe that the Fed is going to get a lot of data. So we would be surprised to see another 50 basis point move. Maybe they do 25. We still think they're overdoing it and the markets won't be happy. But I think what's happening here is this Fed and the members of the Fed are so afraid that they will be stuck with the legacy of reigniting inflation and not being able to put the genie back in the bottle. They're so afraid of that they are they're speaking very fiercely right now, and they've made a bold move, 50 basis points, when the base is only 25 basis points.
The Fed recently announced a 50 basis point increase in interest rates, the most significant bump in over 2 decades. This move is largely in response to the steady growth of the American economy and increasing inflation. The markets are in a frenzy and seem to be calling into question the Fed's strategy. Despite these potential negative impacts, the Fed believes that this rate hike is necessary to maintain economic stability. What do you think about the Fed's decision? Let me know in the comments.
The Fed raised interest rates 50 basis points this week. And I had been saying that I thought that would be a mistake. The markets are corroborating that it seems that the Fed is making a mistake. So we've seen the stock market go through a spasm. The S&P now from its peak is down 15%. The NASDAQ from its peak is down 25%. Pure play innovation strategies like ours are down 60 to 75%. So that's not just a spasm, that's a convulsion. And you'd think that innovation companies that are not in benchmarks are witnessing the end of their world. It couldn't be further from the truth. This is a huge inefficiency in the market, this tendency to move towards benchmarks in risk-off environments. It's ridiculous that the genomic revolution and blockchain technology and crypto assets are all behaving exactly alike. In fact, crypto assets began to correlate highly with the NASDAQ starting at the beginning of COVID. Before that, there was no correlation at all. And so we think this is an anomaly, a massive anomaly, and that with time it will correct and the efficiencies will be introduced back into the market.
The market is changing faster than ever before. According to Cathie, everything, be it NASDAQ, crypto, genomics, is now starting to move and correlate together. They all are behaving exactly the same, and it's becoming more and more difficult to draw a line between them. According to her, the Fed is making a big mistake right now, especially when the markets are corroborating. The Federal Reserve's recent decision to increase the interest rate by 50 basis points are leading to the market crash, and is fishing most of the stocks towards inefficiency. She also points out that before the pandemic, the COVID, there was no correlation between cryptocurrencies and NASDAQ, but now you can all see crypto assets are highly correlated with the NASDAQ. And she believes that all this is a massive anomaly, and it's only a matter of time until things are corrected.
Now we are a year into a similar time period. The performance of innovation-based portfolios has been crucified even though the number of problems that have cropped up in the last year have given innovation even more opportunity to perform. Now, because we did so well coming out of COVID, again, our companies were really helping to solve problems. We have faced in the last year the so-called comparison issue. Now, we have a 5-year investment time horizon, so we're not looking at year-to-year comparisons. Nonetheless, the markets got caught up in, oh dear, how much slower is it going to get? And so we've been grappling with the consensus Wall Street expectations year over year, and their worries that growth rates would continue to slow down into negative territory, much like they did during or in the aftermath of the tech and telecom bubble. We couldn't be further away from the tech and telecom bubble. The risk-off period that higher interest rates and inflation have caused has forced investors who have been risk-off, don't have as much tolerance for risk as they once did, to diversify back to their benchmarks. That they have done, we believe, and in so doing, they have sold our stocks. Our stocks are not in benchmarks, with the exception of Tesla in any great measure. And as you'll notice, Tesla has held up much better than other of our innovation stocks. It's because it was put into the S&P 500 and other indices in recent years. Actually, S&P was in late 2020, and since then it has held up better. So we believe that our technology holdings are the technology and innovation holdings that will serve the future. And in contrast, the S&P 500's exposure to technology is 28% of that index. We don't own any of those stocks. We do not think that technology stocks in the S&P 500 are going to participate in the true transformation of the global economy in the next 5 to 10 years.
She also explained how the S&P, NASDAQ, their pure play innovation strategies are all getting in that red color. Every market, including crypto, is down. And there's been a lot of talk in the media about how risk-off investors are selling and moving their money into other assets and safer havens than crypto. This is supposedly happening because of concerns about the crypto market and inflation, tension between Russia and Ukraine, and the Luna crash. But Cathie Wood highly believes in certain situations, like when the market is in a risk-off mode, people move to benchmarks. But in reality, the benchmarks can actually mislead us and lead to disastrous consequences.
Now, I've been around in the business for 45 years, and I've never seen the opportunities I see now. According to our expectations, truly disruptive innovation, which right now is valued in the global public equity markets at roughly $10 trillion, roughly 10% of the global equity market cap. We believe that 10 trillion is going to scale to 210 trillion by the year 2030.
Cathie Wood talks about the opportunities that are available for those who are looking to make a change. She emphasizes that most people are so focused on the day-to-day activities that they're not looking at the bigger picture, and that's what's happening in the economy. As a result, they're missing out on opportunities that are right in front of them. The question is, what can you do to change that? Let's hop into her clip. But before that, if you like the content, don't forget to give a big thumbs up.
We want to establish now how different the fundamentals of our companies are relative to those that were birthed during the tech and telecom bubble. Those were seeds, and many of the seeds failed. If you look at the NASDAQ, they won't even publish what their holdings were in 2000, 2001, or 2002, or 2003. We tried to get hold of those companies. They won't show them because so many failed. Given the dreariness in the equity markets and the bond markets today, and now increasingly the commodities markets and crypto, take a look at our research. Read our Twitter profiles. for some hope and optimism, because I can't tell you how excited and confident we are that our platforms are going to transform the world and are entering exponential growth trajectories now. This is not about 5 years from now. We are now living the reality that was only a dream in the tech and telecom bubble. That was a dream, and you had investors piling into the dream. Today is the reality, and they're running away from it. They're running for the hills, running for their benchmarks. The decisions in the tech and telecom bubble ended badly. The decisions, those running away from innovation right now, we believe those decisions will end badly as well. So again, read our research for hope, optimism, and really a thrilling look at what the future is going to hold.
So she explains that back in time, when everyone piled into tech stocks, it was too soon and eventually tech crashed. But right now, tech is ready. However, right now there are a lot of people who are running away from innovation. Everyone is clinging to their benchmarks. Just like that, crypto is also the future. And even if the crypto market is going down currently, it doesn't mean it's going to stay the same forever. Crypto is the future. She suggests that people should be looking towards the things that hold the future. She believes that if you do not think about the long term, those decisions will end badly as well. Cathie Wood concludes that investors can earn millions by investing at the right time, when it is cheap. Those who buy now can earn handsome returns in the stock and crypto markets.
So there's a lot of superficial analysis out there, and a lot of cherry picking also in terms of indicators.
She also explains that there's a lot of superficial analysis in the market, and investors should refrain from listening to them. As I also suggest, listen to the experts, take a look at the market, do your own study, and then make a decision. So to conclude my video today, Cathie Wood suggests that amidst fleeing investors and the current uncertain state of the market, people who are holding and genuinely staying with the market will emerge stronger than ever. With a focus on long-term value rather than short-term gains, investors will be able to weather any storm. So what do you think? Is this the right time to sell or buy? Let me know in the comments below. If you want to stay updated with the latest market trends and more videos like this, don't forget to hit that bell icon and subscribe to my channel. I'll see you in the next video.